How to instantly slash your car insurance premiums by 40% or more. In this video, we are going to talk about how to dramatically lower your car insurance premiums by 40% or more by making just one simple change to your current policy. That change is going to be to your car insurance deductible. So let's first define real quick, what is a car insurance deductible? Your car insurance deductible is the amount you, as the insured, agree to pay whenever you are in an auto accident and you submit a claim to your insurance company. Any additional costs that exceed the amount of your deductible are then paid by your insurance company. If you have either comprehensive or collision coverage on your current policy, then you have a car insurance deductible. If you're not familiar with these coverages, then here is a quick overview of them. Comprehensive car insurance addresses any harm done to your car outside of a collision. This includes damage caused by theft and natural disasters like wind, floods, tornadoes, hurricanes, or fires. Collision car insurance provides coverage for damages incurred during an accident with another vehicle. Both comprehensive and collision coverage will typically follow you in whatever car you are driving. Essentially, this just means that your insurance will apply whether you are driving your own car or if you have an accident occur in a borrowed car. Alright, now that we have an understanding of what a car insurance deductible is and what it applies to, we need to find out what your deductible amount is and if we can change it. To find out how much your deductible is, you will need to get out your policy and find the declarations page. Here you can see exactly what type of deductible you have, such as comprehensive or collision, and how much it is. Look for something like this somewhere on your policy. Either comp or comprehensive, or col or collision, and then a set of numbers like 250 or 500 or 1000, and there may or may not be a D. Usually there will not be a dollar sign in front of the deductible. It will just have the number. Also, unless you're familiar with deductibles and have actually used them to your advantage before, then most likely yours will be 250. That seems to be the one most insurance companies recommend. And rightly so. The lower your deductible, the more you'll pay and the more they'll make. But more on that in a moment. Now I realize at this point many of you are beginning to see where I'm headed with all of this, and you may be concerned that raising your deductible is not really a wise choice. Because after all, that just means more you'll have to pay if an accident actually occurs, right? Well, that's actually wrong. I know at first thought it may seem that it would be the wisest choice to have the lowest comprehensive and collision deductibles possible, but please bear with me. I'm going to show you now how raising your deductible will actually save you money, even if you have an accident or multiple accidents. First, I'm going to show you some statistics, and then we'll do some basic math to illustrate how having a higher deductible will actually save you money. The true statistics behind deductibles. About once every 10 years, every driver will have some sort of damage occur to his or her car, whether it be through an accident, or theft, or other causes. This means you have a 1 in 10 chance of being involved in an accident each year. Out of these, only a little over half will be serious to your car or yourself. This means you have a 1 in 20 chance of having a serious accident each year. And finally, you have an equal chance that the damage done may or may not be your fault. This narrows it down even further to a 1 in 40 chance every year of you even having an accident that's your fault and having to pay your deductible. Now let's compare that to some other statistics to see how little your car accident chances really are. Did you know you have a 1 in 3 chance of dying from heart disease and a 1 in 6 chance of having a stroke? Furthermore, an American man has a 1 in 2 chance of developing cancer, while an American woman has a 1 in 3 chance. After looking at those statistics, a 1 in 40 chance really doesn't seem that bad after all. When it comes to your car insurance deductibles, it is time to stop letting your fear get the best of you. Before you decide on a deductible, stop to consider the facts. The more informed you are, the better equipped you are to know where your money is really going and how you can best save it for yourself, and not for your insurance company. Now let's talk about what your deductible should be. You have just seen the statistics, and I hope have determined that you shouldn't let fear be your deciding factor when setting your car insurance deductible. Now it's time for us to do some simple math that will allow you to see just how much money you are literally donating to your insurance company. Just check out the following example. A $250 comprehensive and collision deductible, doubled up to $500, will generally bring you a 40% discount on your premiums. So if you currently spend $1,000 a year on your car insurance, you'll save up to $400. Multiply that by 10 years and you could save $4,000. That is $4,000 you can put back into your bank account and save or spend on other things. And even if you do end up hitting that 1 in 40 chance of getting in that serious accident every 10 years, you will still be saving a significant amount of money. Sure, you will have to pay your $500 deductible, but that only reduces your $4,000 savings to a still hefty $3,500. Even with 4 accidents, that comes to just $2,000 you would have to pay in deductibles. Subtract that from your original savings of $4,000 and you are still saving $2,000. But what if you already have a $500 deductible? Well, even if your deductible is already at $500, you might consider raising it to $1,000. This will give you a 20 to 30% savings. So using the same formula as before, if you currently spend $1,000 a year on car insurance, you'll save $200. Multiply that by 10 years and you would save $2,000. And once again, if you manage to hit that 1 in 40 chance of getting in a serious accident every 10 years, you will only have to pay your $1,000 deductible, leaving you still with a total savings of $1,000. Depending on your car insurance company, you might even be able to raise your deductible to $1,500 or $2,000. This will no doubt cause your savings to skyrocket even further. However, I must advise you to make sure if you take this high of a deductible that you have the financial stability to pay it should you need. For most people, just switching from a $250 to a $500 deductible will be the optimal choice to maximize potential savings and still have the coverage needed in the event of an accident. The last thing I want to cover concerning making changes to your deductible is if you have an older vehicle. By older vehicle, I mean one that has a wholesale value of less than $2,000. If you do not know the wholesale value of your current vehicle and wish to find out, just visit the Kelley Blue Book site at kbb.com and you will be able to see how much your vehicle is worth. My suggestion to you is that if you do in fact have a vehicle that is worth less than $2,000 wholesale, that you simply drop any collision or comprehensive coverage entirely. The reason for this is that regardless of its age, a car's replacement parts are going to cost the same, and if you do get in a serious accident, it will most likely cost more in repairs than the wholesale value of the car. In this case, your insurance company will deem the vehicle totaled and will only pay you up to the total amount of the vehicle. For example, if you have $4,000 worth of damages, your insurance company would only pay the value of the vehicle, which is $2,000 minus your deductible. If you had a $500 deductible, then they would only pay out $1,500 and you'd be stuck with a total of $2,500 in repair costs. So if you have an older vehicle like this, do yourself a favor and quit paying that ridiculously high insurance premium that isn't even going to cover you when something happens. Now, besides changing your deductibles, I also promised you that I would give you a checklist that contained over 40 different discounts that most car insurance companies provide, but will most likely never ask you about. There is a link just below this video that will take you to that list. Feel free to print it off or bookmark that page for future reference. Now, before you access the discount checklist, I want to tell you a few things about it. First, not every single item on the list is going to pertain to you. So not everyone will be able to achieve the same level of savings from using the list, but my suggestion to you is to spend some time going over every one of the items on the list and placing a check mark next to those that might apply to you. That way, when you begin comparing quotes from different insurance companies, you'll know which discounts to ask for right away. Also, there is a new item that has been recently added to the list that I discovered just a short time ago. I felt the need to mention it here because this is an item that will definitely apply to everyone watching this. What am I talking about? Your credit score. It may seem odd that your credit score is in any way related to your car insurance premium, but the truth is it's very important. The insurance industry has been keeping statistics on credit ratings and insurance claims for a long time. And as a result, there are 3 main reasons why your credit score has become such an important factor in determining your insurance rates. Number 1, insurance companies have found in general that the lower your credit score, the more likely you are to file claims, exaggerate the claims that you file, and perhaps even commit insurance fraud. Number 2, insurance companies feel that if you are not responsible with your money, then you are more than likely not going to be responsible on the road. And number 3, if you've missed a few payments to your credit card company or have written a lot of bad checks that wound up in collection maybe, chances are you'll do the same thing to them. So just how much more will you pay for having poor credit? Well, it will vary from company to company, but some companies have been found to charge poor credit customers as much as 3 times the rate for customers with excellent credit. So believe me, it really does pay to know your credit score and how to make it better if in fact you do have a poor credit score. So where can you find your free credit score? Luckily, there are quite a few sites online that will give you your credit score for free. One I highly recommend is freescore360.com. This website will give you instant access to your 3 free credit scores and your credit reports. A good credit score is anything over 680. Anything below that, and you may likely have to pay more for your car insurance. I have provided a link below this video so you can get instant access to your free credit score and credit report. If after getting your free credit score from freescore360.com you discover that your score is less than desirable and you need to raise it, then I would highly recommend you check out this second resource, thecreditsolutionprogram.com. Thecreditsolutionprogram.com is a great free service created by my good friend Mike Roberts. It will walk you through how to eliminate any negative items on your credit report that are affecting your score. I know Mike himself has used the exact steps he teaches to boost his own credit score from a poor 540 to an excellent 723. My wife and I have also previously gone through his teaching, and he helped us to identify the negative items on our own credit reports and how to get rid of them. If you decide you need it, you will also find a link to the Credit Solution Program below. I hope you have found the information I have shared with you today to be helpful. But more than anything, I really hope you put it to use so that you can start saving money on your car insurance. Don't forget to click on the links below to get instant access to the 40 discounts checklist and your free credit score. And if you're ready to get the maximum amount of savings on your car insurance, make sure you use an online comparison site like yourinsurancediscount.com to find the best rates. Thanks for watching and have a great day.